All right, I'm going to go over the reason I got into the trade today. It's the end of the day now. Looks like we finished the day around the 5,300 mark. But this is the area that I want to focus on before the market opened. I went ahead and marked out the New York high from Friday and the low from Friday, and also the London high and low from this morning. And we had a number come out. One thing we do need to keep an eye on, this was a final manufacturing PMI, and the number was greater than the expectation. And if you click on that little folder, it says if the actual is greater than the forecast, it's good for currency. So that kind of gave me an idea that the value of the dollar might be going up. And when the value of the dollar goes up, the assets, it takes fewer dollars to buy these assets. So the price typically responds in kind and goes down. That number hit at 9:45 New York time, which is right in this candle. And you can see we started on our way down here. Um, I think that was when the number hit. 9:45 a.m. June 3. Yeah, it looks like about the time the number hit. We were kind of going pretty slow. The market had just opened. We came down. We put up a fair value gap right in this area. There's a fair value gap. Now, whenever you're looking at the narrative, the market narrative, you look at the candle bodies. The wicks, they do the damage. They take out stops, but they don't tell the narrative. So the candle bodies right here, those would tell the narrative. So right there at the top of those two candles, you can see that's pretty equal. But there was somebody up here that was probably short, a retail person with their stops maybe resting above this one, and they had to get wicked out so the price could go down. Another motivation was we had equal highs with the London here. It didn't take them out; they're dead equal. And so I was thinking that if there was liquidity resting above there, it would have taken it out. So that was another thing. And this one went up to it, but it didn't go past it. So that gave me another indication that we could be seeing a downward move. And so I'm going to get rid of this one for just a minute, just to get it out of the way. It's not important right now. Maybe important later, where we ended for the day. But this is the fair value gap that I'm talking about right here. And this is on a 1 minute chart. And you see that fair value gap, the wicks went through it, but the bodies respected it. And this one actually started another fair value gap. If we were looking at a 2 minute chart, it would have been the halfway point of that entire fair value gap. So that's what gave me another idea. Okay, we need to be looking south. So that's two confirmations. We did not take out the London high. We had a fair value gap to the downside. We came back and we retested it. It held true. So I actually went short during this consolidation right here. I put in a sell short right around this area, and I got filled. I think that was where it was. It may have been around here. I can't remember. It was. I was looking at a 5 minute chart. So let me look. Let me switch over to that 5 minute chart. Yeah. So yeah, we wicked up. Did not take out the high. We come back. We were in this area. I wanted to see it take out these lows and then come back and test into this. And so I got short somewhere in this candle, is what I ended up doing. And I think I took my profit somewhere around here. I was worried that we were going to go back up and I would lose my profit. So I went ahead and just took my profit. I think it was on this candle right here. On the 1 minute, you can see that reversal just a little better. You can see we're going down, 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 and then I see this, and it puts up a fair value gap right there, And I was like, eh. I took it out during this consolidation when it reached a little too high for my liking. And if I would have held it, I would have been okay. But I would have had to watch my $1,000 evaporate before I was okay. So I went ahead and took the profit. But my target was at 67, and that would have put me at the $1,400 mark. And you can see it did get there. My prediction for the day there was that we would trade down around a 52.40 level. We didn't quite make it there. If you look back on this run up right here, I was targeting right here at this consolidation to be the target for the day if we went lower, or it was this red candle right here. If we went lower, so it would be somewhere around here, but we didn't quite make it. So this level right here is one of importance for tomorrow for sure. We would label that the New York low for tomorrow. Next time it comes down this way, I would even say maybe the candle bodies. You could even do a 50% of that wick, but I am going to mark that out. We did trade down. That would have been a much more profit had I held it. Now the New York high, I moved it out of the way so we could see all these candles back here, but it's pretty close to where it finished the high from Friday. This is the New York 4 p.m. high. So right there. So it's not quite there, but it's close. So that's why I got in the trade. If you look at that 5 minute again, we had the fair value gap that got tested, but not, it's actually a bigger on the 5 minute. It got tested, but it did not get hit again with any candle bodies. It was respected by the candle bodies. The wicks went through, but the bodies didn't. That's what motivated me. That, the news, and the fact that we didn't take out these highs when we came up here. So that was my indication to yes, there's a high probability we're going south. And I got in on this consolidation right here once we'd taken out these lows. So that's it. That's why I got in. That's the system I try to teach. Just be patient, learn it, learn to spot these fair value gaps. The 5 minute fair value gap is a lot more powerful than a 1 minute. So keep that in mind. We'll be back to trade again tomorrow. Hopefully you all can learn it and everything will be fine. You can write your own paycheck.